Let's ask PJ Garcia, managing partner of Grow Capital Partners, a boutique financial and investment advisory firm providing strategic advice and investment solutions. Good to have you back, PJ. Welcome to the program. A lot's changing. Just a couple of moments ago, you told me that you've already upped some and maybe even reduced or maybe even eliminated all your cash. What's gone on and why?
Yes, I think this is a good time to actually do some rebalancing, especially with the recent announcements or pronouncements of the Fed Chairman Jerome Powell after the Jackson Hole meeting, and indications of our very own BSP Governor Eli Remolona saying that they will further do some cuts. And in fact, they did ahead of the Fed this year, which is for me a good indication, and also reinforces the view. And I agree with Dino, what he said earlier with regards to the BSP being ahead of the curve at this point. Unfortunately, I think the Fed is kind of behind, so I agree with him also on that point. And therefore, we think our bet on Philippine sovereign bonds, especially in the long end, long duration bonds, sort of like paid off for this year. And
that's the 40% level, and you feel that you could add a little bit more.
Yes.
So let's take a look at how your portfolio looks right now. This was just maybe a few weeks ago. You've updated 40% to, I believe, 45%. So you're really big on bonds, even bigger.
Yes.
In fact, what are the durations and what sort of changes did you make and why?
Yeah. First of all, we are just more confident right now. I would say 90-95% that both the Fed and the BSP will be synchronous in terms of interest rate cuts for the remaining of the year, at least 50 basis points. I'm not ruling out a surprise, maybe a third or interest rate cut for the BSP to maybe 75 basis points, as long as inflation still hovers around 1 to 2% below their inflation target for the year. And that, I think, will be very positive for Philippine government bonds, especially on the long end. So we're looking at long duration maturities at this point. So we're extending a duration and, in fact, also take advantage of Philippine corporate bonds that are, of course, yielding or have a higher spread compared to Philippine sovereigns. So some yield pickup there.
All right. Yeah. Looks like we've been able to update that very quickly. My team is going to push up and pull up the latest here, because apart from the 45%, you've also moved away from the high dividend yield plays in stocks, and you've just wanted to invest in the regular PSEI-linked equities.
Yes. The reason for
What's the reason for that?
The reason for that is we're more confident now with regards to our equity allocation or strategy, meaning we're more positive on Philippine core equity stocks, meaning large cap strategy. So for investors who were a bit wary about the volatility and, unfortunately, we're the seller dweller year to date in Asia Pacific equities. Believe it or not, we're the second or third lowest. We're still negative territory, actually, negative 4% or something like that. And most of the Asia Pacific markets are actually positive. So I think, every dog has his day. We think with the recent announcements of both the Fed and the BSP of further interest rate cuts will hopefully improve investor sentiment towards the end of the year. And also, I think a lot of Philippine corporates will be more bold, or maybe take advantage of lower rates and maybe increase their capex spending as they are more confident in borrowing for the long term because of lower interest rates.
Let's visualize that seller dweller in the ASEAN. Just take a look at the PSEI here. It's really just not, gone past how and why it should. Hazard a guess. A lot's going on. Flood control projects, budget transparency issues. What's causing it?
Okay. Philippine macroeconomic fundamentals are still very much positive. And if you look at the Philippine corporate sector, the private sector, there have been some challenges in the first half, yes. Mainly because there's some lower than expected, top line or even earnings were not as positive. It was kind of a mixed bag. But I think that was sort of like maybe some of the uncertainty that the private sector or corporates were kind of not so sure with regards to, especially the elections in May, and we had some political headwinds, in the first half. Remember, right before the elections, and even the election results were kind of surprising. But lately, we've been seeing, especially with the recent, of course, political brouhaha with the what do you call this, the flood control projects, for example, and the like. That's of course weighing in also with regards to investor sentiment, and not only that, but also we're now being, I would say, super news-driven, dependent on what's happening in the U.S., like what President Trump would say. And recently, of course, he's been saying a lot about, again, threatening about tariffs and the like again. So that's sort of like putting some investors a bit on the edge. And for the Philippines, I mean, in terms of the valuations, it's trading at 9 times PE. And for me, that's like 2 standard deviations, below our average mean for the past 10 years. So as an investor, I think that's really a value. If you're a value investor, that's actually a good level to start, allocating more into risky assets like Philippine large cap stocks like the PSEI.
We got about 30 seconds, but was that enough to actually convince you to take away all the cash and just fully deploy?
Yeah, sort of, because like what I said, I'm now like close to 100% sure that both the Fed and the BSP are now aligned with regards to interest rate moves for the rest of the year. And I think that will help boost investor sentiment and, of course, boost fundamentals by hopefully we'll see lower interest rates and corporates are able to borrow at lower rates and plan properly for their capex for next year.
All right. Well, keep a watch on your confidence there. Thank you so much,
Thank you,
PJ.
Gabby. Thanks for
Appreciate it
having
and
me.
your
Yeah.
insights. PJ Garcia of Grow Capital Partners.